Long-term care insurance is a critical yet frequently overlooked component of comprehensive retirement planning that has the potential to save individuals hundreds of thousands of dollars in their later years. As people age, the likelihood of requiring assistance with daily activities increases significantly. Studies conducted by the U.S. Department of Health and Human Services have shown that approximately 70% of individuals turning 65 can expect to use some form of long-term care during their lives, with the average duration of care needs being about 3 years. This stark reality underscores the importance of planning for potential long-term care needs well in advance of retirement. The costs associated with long-term care are staggering and have been rising steadily over the years, outpacing general inflation. According to recent surveys, the median annual cost for a private room in a nursing home exceeds $100,000, while assisted living facilities average around $54,000 per year. Even home health aid aids, which many prefer for maintaining independence, cost about $61,000 annually for 44 hours of care per week. These figures are projected to continue rising by 3 to 5% each year, meaning that in a decade, the cost of a nursing home could balloon to over $146,000 annually. Without proper planning, these expenses can quickly deplete even a substantial retirement nest egg, potentially leaving individuals and their families in financial distress. Long-term care insurance serves as a financial safeguard against these exorbitant costs by covering services that are or typically not included in regular health insurance, Medicare, or Medicaid. These policies are designed to support individuals when they can no longer fully take care of themselves due to chronic illness, disability, or cognitive impairment such as Alzheimer's disease. The coverage can extend to various care settings, including one's own home, assisted living facilities, nursing homes, and adult day care centers, providing flexibility and choice in how and where care is received. The mechanics of long-term care insurance policies involve several key components that policyholders can customize to suit their needs and budget. When purchasing a policy, individuals typically choose a daily or monthly benefit amount, which is the maximum the policy will pay per day or month for care. They also select a benefit period, which determines how long the policy will pay out, and an elimination period, which functions like a deductible but in days rather than dollars. For instance, a policy might pay $200 per day for 3 years, with a 90-day elimination period. This means that after the policyholder has paid for 90 days of care out of pocket, the insurance would kick in and pay up to $200 per day for the next 3 years. The potential savings from having long-term care insurance can be substantial. Consider a hypothetical example of a retiree named Sarah, who has $500,000 in savings at age 65. Without long-term care insurance, if Sarah needs nursing home care for 3 years starting at age 80, she could face costs of $146,000 per year, based on projected future costs, totaling $438,000. This would nearly wipe out her entire life savings. However, if Sarah had purchased a long-term care insurance policy at age 65, paying $2,500 per year in premiums until age 80, her total premium outlay would be $37,500. If her policy covers $120,000 per year for 3 years, her out-of-pocket cost for care would be $78,000. Even including the premiums paid, her total cost would be $115,500, saving her an impressive $322,500 compared to insurance. This example illustrates how long-term care insurance can preserve a significant portion of one's retirement savings. Beyond the obvious financial benefits, long-term care insurance offers several other advantages that are but equally important. These include peace of mind for both the policyholder and their family, knowing that there's a plan in place for potential care needs. It provides more choices in care options, allowing individuals to receive care in the setting they prefer rather than being limited by what they can afford out of pocket. Long-term care insurance also helps protect assets for heirs, maintaining a legacy that might otherwise get consumed by care costs. Additionally, it plays a crucial role in maintaining independence and reducing the burden on family caregivers, who might otherwise have to sacrifice their own time, health, and finances to provide care. Timing is crucial when it comes to purchasing long-term care insurance. Most experts recommend buying a policy between the ages of 50 and 65. The rationale behind this timing is that premiums are based on the policyholder's age and health at the time of purchase. The younger and healthier an individual is when they buy the policy, the lower their premiums will be. Waiting too long could result in significantly higher premiums or even being denied coverage due to health issues. It's important to note that once a policy is in place, the premium is generally locked in and won't increase simply because the policyholder ages or their policyholder. When it comes to types of long-term care insurance policies, there are 2 main categories: traditional long-term care insurance and hybrid policies. Traditional policies work like most insurance products. Policyholders pay premiums for coverage they hope they'll never need to use. If the benefits aren't used, typically, the premiums aren't refunded. Hybrid policies, on the other hand, combine long-term care coverage with life insurance or an annuity. These policies offer more flexibility, as they provide a death benefit to beneficiaries if the long-term care portion isn't used. While traditional policies often offer more comprehensive long-term care coverage, hybrid policies are gaining popularity due to their guaranteed payout feature. Despite the clear benefits, some individuals remain skeptical about long-term care insurance. Common objections include concerns about cost, the belief that they can save enough on their own, misconceptions about Medicare coverage, and optimism about personal health. While premiums can be significant, it's crucial to compare them to the potential cost of care. Self-insuring is an option for some, but it requires substantial discipline and may still leave individuals short if care is needed for an extended period. It's also important to understand that Medicare only covers short-term skilled nursing care, not the long-term custodial care that most people eventually need. As for personal health, while a healthy lifestyle can reduce risks, it doesn't eliminate them entirely, as accidents or cognitive decline can happen to anyone. For those who decide long-term care insurance isn't the right fit, there are alternatives to consider. These include self-insuring by saving enough to cover potential care costs, relying on family caregivers, exploring Medicaid options, though this comes with strict eligibility requirements, considering reverse mortgages, or looking into annuities with long-term care riders. Each of these alternatives has its own set of pros and cons, and the best choice depends on individual circumstances, financial situations, and family dynamics. Choosing the right long-term care insurance policy requires careful consideration of several factors. These include the coverage amount, how much daily or monthly benefit is needed, the benefit period, how long the coverage should last, the elimination period, how long one can afford to pay out of pocket before benefits kick in, inflation protection, how benefits will keep pace with rising costs, and the financial stability of the insurance company. It's a complex decision that often benefits from the guidance of a knowledgeable insurance agent or financial advisor who can help navigate these choices and find a policy that provides adequate coverage without over-insuring. The long-term care insurance industry is evolving to meet changing consumer needs and preferences. Current trends include an increase in hybrid policies, simplified underwriting processes to make qualifying easier, a growing focus on home care benefits reflecting people's preference to age in place, and increased interest from employers in offering long-term care insurance as an employee benefit. These developments could make long-term care insurance more accessible and appealing to a broader range of people in the coming years.